I do not pray for success. I ask for faithfulness. Mother Teresa. Mother Teresa makes a fabulous point. It is faithfulness that brings success. And for us, that's 10 to 15 minutes a day, every day, to learn the nuances of how to read stock charts. It's not 2 hours a week on a Sunday. It's not 6 hours a month on the day or two you set aside. It's 10 to 15 minutes a day. That's how you're going to learn the nuances of the stocks and the ETFs you're interested in learning how to track and successfully practice trade. Let's jump into these charts. And again, great Patreon call today. Thank you for everyone who joined us, Patreon members. Check your emails. We sent you out a recorded version of that live question and answer session where we go over the stocks that you are interested in, the ETFs, and also answer your questions to help you with your practice trading. Now, let's see what's going on. Markets zooming up for the day when it comes to the S&P 500, the NASDAQ 100, 20-year bonds, but not gold. Gold down a little bit. Now, let's see what we see in these charts. Even with the booming up on this day, and who knows what tomorrow will hold when the final tally is done and we know who the president is, and maybe by the time you listen to this, we already do. We have an inkling. We see that the price percent oscillator, which was slamming down, has gone flat on the weekly chart on the S&P. We have a green spinning top. Means indecision, tending down. It's a solid green candle, not a green open box candle. Price percent oscillator, flat. Derivative oscillator, heading down. Again, lots of weight still in the market. Prices still on our Heikin Ashi candlestick still well below the weekly trend line. Now we go to that 2-day chart. What do we see there? We see again this past 2-day candle representing Monday and Tuesday is a green spinning top. It blew through that on Wednesday and sitting right there up. It didn't close through. It set right there up on the weekly trend line. So we'll continue to watch that. We'll also watch as to whether or not the 2-day chart crosses over. Remember, it's just the first day of the latest 2-day candle. It will end on Thursday. If indeed it crosses over going up, it would have to be a big boom tomorrow, but that's possible in this crazy world. We'll see. We'll continue to watch, see what there is to see and learn. We look at the half-day chart, and what do we see? We see that the exuberance knocked the market up in the morning. It didn't reach a higher high in the afternoon. It did close higher than the closing in the morning, but not a higher high. Did push through the weekly trend line. Price percent oscillator, you can see it lost a little bit of that angle going up. Derivative oscillator still heading up. So we'll pay attention, see what there is to see and learn here. Now we leave the S&P and go to the NASDAQ 100, up over 5% at one point, up 4.46%. But again, even with all that up move, look at what we have. We have a green spinning top, and not a big top. And it's solid green, not open box. So again, even with that big up move on Wednesday, still we see the price percent oscillator is just flat. Derivative oscillators lost a little bit of energy. Go to the 2-day chart. Hasn't crossed over either. Price percent oscillator is heading up. Derivative oscillator losing downward momentum. We do see that the 2-day candle, first day of the 2-day, we can't call it a fully done candle yet, but it has pushed through the weekly trend line. Go to that half-day chart, and again, we see where we reached a higher high in the morning, then in the afternoon, but it did blow through in the morning and afternoon, the weekly trend line. So we'll watch. Tomorrow will could be very dispositive on whether or not the overall down move the market changes, or if things just rattle off, lose momentum, and start heading down. Now, the pallor in the marketplace, the overall mood still is down. We don't have a crossover. Things are flat. So we'll wait and see how that works its way out. I hope that you are filling out your trade worksheets if you're in any kind of trades. And again, there's no problem not being in any kind of trade. Why? Because of the crazy volatility and the fact that we have an exogenous event going on right now. Don't know how this is going to end. And again, part of your practice trading is learning what to do, as well as learning what not to do. We talk about that over and over and over again. That's why we practice trade. That's why we fill out trade worksheets, daily market worksheets, weekly market worksheets. You don't know what those sheets are? My friends, they are always in your show notes. If you're not a subscriber and don't get the show notes, although they are attached to the YouTube, they're also attached to our podcasts. And of course, those of you who subscribe, you get them every day, and you can subscribe for free by going to chartingwealth.com, sign up. You get all the special trainings that you don't otherwise get at YouTube or the podcast. Now, the training we have for you today is a really good one. It is use all the charts all the time, and it explains how we use, when we say all the charts, I mean the weekly, the 2-day, and the half-day chart, and how we use those together. Very important. Now, going to leave stocks, go to bonds. Bonds up. Now, you would think if stocks are up, bonds should be down. If bonds are down, stocks should be up. I mean, they typically run converse to each other. What do we have going on? Bonds are up 2.17%. And look at what we see happening. Price percent oscillators flat. We have a green spinning top, lots of indecision. It's slowed down its down move, and we're just watching. Derivative oscillator losing some downward momentum. It has pierced the weekly, a fairly decent weekly trend line. That has been pierced by the latest move up today. We look at the 2-day chart. It is blasted through it first day. Both the 2-day and the weekly trend lines close to crossing over, going up. Now again, what does that typically tell us? If bonds are going up, stocks should be going down. So we're in a flux right now because we're getting mixed signals. So what do? We wait for the trend to materialize. And when we see the trends materialize in any of our charts, that, my friends, is when we pull the trigger on our practice trade. Derivative oscillator went positive on the 2-day chart today. We'll see how the 2-day chart finishes when it closes at the end of the market on Thursday. We go to the, wow, look at the half-day chart. That is a massive candle, booming up, going from down to up on the price percent oscillator, also in the afternoon on the derivative oscillator. It bounded up in the morning and then pulled back some in the afternoon. So interesting to see and watch. Lastly, we go to gold. What is gold doing? Continuing its downward and sideways slide. Gold down for the day, 0.06%. Price percent oscillator still heading down. Derivative oscillator has been losing some downward momentum for the last few weeks, so we'll continue to watch and see. Now, what's going to happen first in gold? This 2-day chart is going to cross over going up. Look at it. It's pushing through the 2-day trend line, not much of a trend line, and the weekly, and again, trying to push through that. So we'll watch and see. If we see a 2-day crossover going up, maybe portending gold ending its down moves. Look how long the 2-day chart has been going down. It crossed over going down after the peak. The peak of gold recently was back in early October. 2-day chart crossed over going down in mid-October. Weekly chart crossed over going down in mid-September. So we'll see if this event occurs. If it does, it may portend a reverse in gold. And gold, you know, they say what? They say it's going to go up to $15,000 an ounce. Well, we will see. And if it does, of course, we want to track that up. It's not doing it yet. Lastly, we go to the the half-day chart. We see the half-day chart actually, after going up for several days, it has sort of run down during the course of the day, came off that weekly trend line, both in the morning and the afternoon, although that price percent oscillator was flat in the morning, then piked up in the afternoon. Derivative oscillator continuing to gain momentum. So we're really going gold, going to watch that 2-day, see what it does. That's where we are, folks, as we end the day. If you don't have our book, we have an autographed copy waiting for you. Again, thank you so much, Patreon members. You help supply the funds for our fight to produce all of the free training that we do on a daily basis. And we so appreciate your support and help. Hope that you find that Patreon training we did for you today very helpful. Check your emails. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.